Most traders spend hours every night scanning through hundreds of charts trying to find the next big move. So today I'm going to show you how to do that same work in under 10 minutes using a completely free tool called Finviz. By the end of this video, you'll know how to build 2 professional grade screeners from scratch, build a breakout and gap up setups the way real traders do it, and have a simple daily routine that puts you in front of the right stocks every single morning. And stick around to the end because I'm also going to show you a pattern finding feature that most traders completely overlook. It can save you hours of manual chart scanning every single week. So let's get into it. Hi, I'm Jacob Wade. I've been investing for over 20 years and I'm currently a partner over at WallStreetZen.com, where our quant team analyzes over 4,600 stocks daily. And if you like no frills, straight to the point tutorials just like this, be sure to hit the like button below. This will tell me to make more of them and tell YouTube to show this to more people. Thank you. So what exactly is Finviz? Well, Finviz stands for Financial Visualizations, and it's one of the most widely used free stock research tools out there. Traders at every level will use it on a daily basis. And the reason is simple. It gives you a massive amount of market data in one clean, fast interface. Now, before we dive into Finviz, I'm going to show you my screen here in a minute. I want to clarify one term that does trip people up. You're going to hear the words screener and scanner thrown around, and they mean slightly different things. A screener is what Finviz uses. You set your criteria up front and it filters the entire market for you based on those rules. Now, a scanner, on the other hand, monitors the market in real time as trades happen. For most swing traders and day traders doing pre-market prep, the screener approach is exactly what you need. And so everything I'm showing today is going to be available on the free version of Finviz, no paid account required. All right, so if you just go to finviz.com, it's going to look like this. And I just want to give you a quick lay of the land to show you know where everything lives. So at the top of the page here, you have the main navigation. And the section we're going to live in today is called the screener. And one thing I want to point out before we build anything here, Finviz will give you preset screeners right out of the box. So if you go to Signal and hit the drop down, you got things like top gainers, new highs, overbought, and these can be useful for quick reference, but we're going to be building our own today because a custom screener that you understand is always more powerful than one you just clicked on. So inside the screener, there are 3 main tabs. You have descriptive, you have fundamental, and you have technical. Now, descriptive here covers the basics, things like market cap, price, volume, and what sector the stock is in. Now, fundamental covers financial data like PE ratios and earnings growth. And technical over here, this is where you're going to filter by price action, moving averages, and chart patterns. So we're going to be working primarily in the descriptive and technical today. So let's build our first screener. All right, first we're going to be building a breakout screener. Now, what exactly is a breakout setup? A breakout happens when a stock pushes above a key level of resistance, and it does it with strong volume behind it. That volume is the confirmation that real buying pressure is actually driving the move, not just some hype or noise. So we're going to build a screener that finds stocks that are set up for exactly that kind of move. So first, let's go through the descriptive tab. You've got a couple of different settings we're going to change here. So exchange, let's just keep it on any. We're not going to limit it to a specific exchange right now. Now for the market cap, we're going to go mid cap. Again, this is $2 to $10 billion. That really is the sweet spot. These stocks have enough liquidity to actually trade smoothly, but they have room to make meaningful percentage moves. They're not already at the top. Now, this one's important. The average volume, we want to make sure it's over 300,000 shares. This filters out any thin, illiquid stocks. So if the average volume is too low, you can get trapped in a position with nobody to sell to. All right, now current volume, we're going to set this to over 1 million. Now, this tells us there's already unusual activity happening today. Something is driving interest in this stock right now. Now, we're going to also go over to relative volume here, and we're going to set this to over 2. Now, what relative volume does here is it compares today's volume to the stock's average. A reading above 2 means it's trading more than twice its normal pace. That is a significant signal. Now, the industry, we're going to select stocks only. So if you go over here to industry, make sure you select stocks only, because in this screener, we want to exclude ETFs and funds and things like that. All right, next we're going to go to the price and we're going to set it from $5 to $20. Now, the reason we want to do this is stocks in this range tend to be more volatile, which creates bigger percentage moves and opportunities. But if you get below like $5, you're kind of in penny stock territory with thin liquidity, much higher risk. And above 20, the moves are there, but you need more capital to actually trade them efficiently. So this is really our sweet spot. So now that we've done that, we're going to switch over to the technical tab. Now this one's going to be pretty simple. What we're going to do is set that it is trading above the 20, 50, and 200-day simple moving averages, the SMA. So we're just going to say it's above each of these, right? Just go to the drop down, hit price above each of the moving averages. Now, the 200-day moving average is the most widely watched level in all of trading. Institutional investors, hedge funds, and major algorithmic systems all pay attention to it. When a stock is above its 200-day, it signals that the long-term trend is healthy. When it's below that, you're really kind of fighting uphill. Now, by requiring the price to be above all three of these moving averages, it means we're screening for stocks that have confirmed uptrends in short, medium, and long-term timeframes. That is a strong technical foundation after a breakout. So now that these filters are applied, you could get a list of stocks, or like today, there is a single stock that meets our criteria. Now, what you're going to want to do is switch to the charts view to evaluate the results much faster. So again, if you had multiple stocks, you would see multiple. Really, you're just seeing the one here. What you're looking for is stocks that are consolidating near a resistance level, setting up a clean base for the next move. So let's look at a real world example. So we've got this stock here, Chemours Company, CC. And if we open up the chart, we can see we've got the support level down here in blue. We've got the resistance level here in purple. And you can see the three moving average lines, right? So you can see that it's above the 20, 50, and 200-day moving averages. Now, when you find a setup like this, here's really the framework. You want to identify your entry point just above that breakout level. So as you can see here, when it originally broke this trend, this blue line started, and you can find that resistance level. So if we continue to follow that as the level that it broke out and will stay above, you want to set your entry point, your limit order just above that. So for this one, it could be, let's say around $17 would be your entry point. And then you want to set your stop loss below that nearest support level as well. So if we have 17 as our entry point, you would probably go down to, let's call it 16, because that would be below the resistance level, and you don't want to have it drop too much more than that. And then what you would do is that's a drop of $1 in share price from 17 to 16. You would identify your target. Your goal for this trade would be at least 2x your risk on the upside. So you would go, instead of to $18, you go to $19. Now, this 2-to-1 risk reward ratio is a baseline that professional traders use to stay profitable over time, even if you're not right on every single trade. So basically, you would set your limit order at 17, your stop loss at 16, and your target at 19 for this trade. And of course, you can move your stop loss up with that if it continues to run after that. Now, one more thing you want to check before adding this to your watch list, go back to the screener, and we're going to go to this ownership tab. What we want to do is check the float size here. Right now, it's 148.98 million shares. This is the number of shares that are actually available for trading. And under 200 million is the range that we do prefer. A smaller float means when the buying pressure actually finally hits, there are fewer shares to absorb that buying pressure, which can create a faster, bigger move and higher upside. And if you're liking this video, please hit the subscribe button below. Not only does this channel feature tutorials, but we also have some really incredible and timely stock pick videos. You don't want to miss those. All right, now that we have our breakout screener, let's create a gap up screener. So what exactly is a gap up? Well, a gap up happens when a stock opens significantly higher than where it closed on the previous day. This is usually driven by earnings, news, or some type of catalyst. Now, When that gap is backed by strong volume and a small float, like we talked about earlier, it can turn into a powerful intraday or multi-day move. This screener is one you should run every morning before the market opens. So let's get back into the screener. I've reset the settings here. All right, so we're going to be first looking at market cap of, go down here to under 10 billion, under mid. And then we're going to look at an average volume. Again, minimum of 300,000 is what we want. Again, we don't want illiquid stocks. We want liquidity. We need to be able to trade this. Then you're going to go over to relative volume. And again, we want over 2. Because a gap up on a high relative volume is very different beast from a quiet gap on a normal amount of volume. Now, again, we go to the industry here. We're going to go to stocks only. And then the float, we're going to set the float here to under 100 million. We're tightening the float requirement here because smaller floats amplify the gap move significantly. And then we're going to set the price here from $1 to $20. That's the range that we're looking at. Now I'm going to switch over to the technical tab here and do a couple of settings. So the gap percentage, we want a minimum of 4%. So if you go to gap, we're going to go up 4%. Here's something important about gap size. The 4 to 7% range is often the sweet spot. It's big enough to read real conviction, but not so extended that the stock has already made the total move. So when you see a gap of 70 or 80% or more, the risk profile changes dramatically. And at that point, the stock is likely already priced in the news and you're just chasing it. So once we have these settings, now we have a list of stocks. So let's take a look at what we've got here today. So you can see here, we have a list of companies that have a breakout. There was definitely a jump, a gap of over 4% overnight. And so let's just take a quick look at the first one. So I like to go to the charts tab here and then just click on the charts and just confirm that we're seeing a breakout. And so again, if we look at the trends here and we scroll down, yes, you can see it was trending down and now there has been a breakout and then it hit a level of resistance. And you can see that here in the chart. So definitely you're seeing that this is a full breakout. Now, if you want a more detailed chart, this is just a quick overview. I like to open up trading view at the same time so you can actually get a full detailed view of the chart. You can draw your own analysis. You can put your own overlays on top of this. So if you want to check out trading view, again, we'll put a QR code on the screen as well. But trading view, if you really want to dig into the details and actually start to track and do some charting, you can go ahead and do that. But if we take a look at this, it meets all of our criteria. And again, if we go back to the overview here, there's definitely a jump. It has high volume. Again, this is more than 2x what it normally has. And there's definitely a confirmed breakout. So that's how you find a gap up using these screener settings. All right, the next feature is honestly one of the most underrated things in Finviz. And for most people, they scroll right past it. So if you go into the technical tab itself, there's a pattern dropdown. And using this dropdown, Finviz will scan the entire market and return only stocks currently forming a specific chart pattern. So let me show you the double top pattern, for example. So if we go down to double top, now we have a list of all the stocks that are showing a double top pattern currently. And if we go over to the charts, you can confirm that double top, double top, double top. Yep, they all have it. Now, I can layer additional filters on top of this: volume requirements, price range, or moving averages. And you can narrow down a universe of thousands of stocks to just a handful that are actually worth your attention. So this feature alone can save you hours of manual chart scanning every single week just by tracking these patterns in this dropdown. Now, here's where I want to add something. Finviz is an excellent technical tool, but once you've identified a setup you like, a breakout candidate or a gap play, anything, the next question smart traders ask is, what's actually going on with this company? Is the business growing? Is it burning cash? Are analysts upgrading or downgrading? Because a technically perfect setup in a fundamentally broken company is a much higher risk trade than the same setup in a company with real momentum behind it. Now, that's where WallStreetZen comes in. WallStreetZen makes it really fast to get the fundamental picture on any stock that the screener will surface. The Zen ratings system takes 115 factors proven to drive stock growth and distills them into an easy-to-read letter grade. You can drill deeper with individual component grades for key areas like financials, sentiment, growth, and more, so you can get a true idea of a stock's worthiness and specific strengths and weaknesses. So the workflow I would suggest is this. use Finviz to find the technical setup, and then head over to WallStreetZen to quickly validate the fundamental story. If both of them are pointing in the same direction, you've got a much stronger case for a trade. Now, I'll link to WallStreetZen in the link below, or you can just go to wallstreetzen.com, or you could just even scan the QR code on the screen right here. It's free to get started with the tool. But let me just show you a quick example of what this could look like. So if I pull up the chart, we were looking at CC, right? And we said, okay, there's a decent breakout. It's above all these moving averages. Is this company worth it? So I would go to wallstreetzen.com, just type in CC and open up the company. And as you can see, you'll quickly see we have a Zen rating of a C. It says hold. It's not really something that you might see significant growth on based on our fundamental analysis. And again, if you scroll down, you look at the component grades, you could see sentiment is really low right now. It's an F rating, and then everything else is just not impressive. It's a C. The entire industry that this is in has an industry rating of a B, and there's a lot of A-rated companies in this industry. This is not one of them. So even though the technicals are pointing us in the right direction, we go to WallStreetZen to confirm, you know what, maybe this isn't a good fundamental play. All right, one more thing I want to share with you about Finviz. Before you run any screener in the morning, do this first. Check the maps section. So if you go over here, you can check out the heat maps for different indexes or for the entire market. If you go to all stocks here, you can see by a quick glance how the entire market is currently performing. So green tiles mean the stocks are up, red means it is down. And the brightness of the color tells you the actual magnitude. So a bright green is up significantly and a muted green is kind of barely moving. And again, you could toggle between different views. You can look at the S&P 500 or the Russell 2000 and even a world view if you want to see what's happening on a global scale. So why does this matter before screening? Well, because context is everything. And if the heat map is showing a sea of red, running a breakout screener makes less sense. The market environment isn't supporting that kind of move at all. But if technology and energy are lighting up green, then those sectors is where I want to focus my screener on first. And again, this heat map takes about 30 seconds to read. Please make it the first 30 seconds of your morning before you dive into the screeners. All right, now that you know the steps to take here, there's one more thing I want to impart with you. This is a mistake I see a lot of traders make. They find an interesting stock and they write the ticker on a sticky note or save it on a list somewhere, and that's where the preparation ends. That's not a true watch list. What you want to do is build a real watch list. And of course, I'll show you WallStreetZen makes that easy to create. As you can see here, and I'll get out of the way, we were taking a look at this stock, CC. I could just hit add to watch list. And right now I have a current watch list and I can just quickly add it there. And if I go to watch list here and I go down, I could take a look at the specific stocks that I have that I'm watching. And of course, WallStreetZen will give you updates on these stocks on a daily basis, as well as specific updates when something big changes on these. And to mention it's free, again, you can go check it out. Just go to wallstreetzen.com. And if you decide one of these tickers is worth your time, you're now going to need a trading plan. Now, typically, these are some smart things that you're going to want to include in this plan. Number one, why you actually like the setup. You're actually going to write this down. Number two, your exact entry point, the specific price or condition that triggers your trade. Number three is your stop loss, where you're getting out of the trade if it goes against you. Very important. Number four is your target. We talked about targets. This is where you're actually taking profits on this trade. And then write down any notes on the trade itself, catalysts, earning dates, or sector tailwinds that you should know about this stock. When you sit down with an actual written plan before the market opens, you remove emotion from the equation. You're not making decisions in the heat of the moment. You're executing a plan that you already made with a clear head. Now, if you want a head start on your plans, here's a fantastic resource. We generated a report featuring 3 stocks that could double or more in the coming year based on fundamental strength that we identified using the Zen ratings system. So click the link in the description below or just hit the QR code on the screen right here for access to it. And yes, it is free. All right, so let's tie everything together with a simple daily workflow. This is the kind of process that separates traders who improve over time from traders who stay stuck. Step 1, open the heat map in Finviz. This takes 30 seconds. Ask yourself, what is the overall market sentiment? Which sectors are hot? Where do you want to focus? Step 2 is run that gap up screener. Do this pre-market. What is gapping up with real volume? Build your intraday watch list based on this. Number 3 is now run that breakout screener. What is setting up for a potential move today or maybe even this week? Add anything with a clean setup and a solid risk to reward to your swing trade watch list. And then step 4 is build your watch list properly. Pattern, entry, stop loss, target, notes. Written down, not just the ticker symbol. Make sure you write down your trading plan. And then step 5 is execute your plan. Don't improvise. Trust the work that you actually did before the open. Now that's it. The whole thing takes under 10 minutes on a normal day, and everything I just described is available completely free. Listen, consistency with a process is what builds skill over time. The traders who do this daily, even when the market feels boring, are the ones who are ready when the real opportunities show up. All right, now you know how to set up scanners on Finviz. What do you think? Are you going to give it a try? Leave a comment below. Let me know how you like to use these tools and what you're looking to do with your trading. Now, we got into charts a little bit in this video, but if you want to go a little bit deeper, I highly recommend you check out my video on how to read a stock chart right here.